All right, time now for Futures in Focus. We're going to dig deep into energy prices. So oil extending gains despite the IEA's warnings about global oil demand. The agency says demand won't experience any significant boost from vaccines until the second half of the year. Well, joining me now is a man who knows all the trade flows, Nick Potter, Equinor head of North America gas trading. Nick, you're the gas guy, so I'm just going to try and pair the oil story with the gas story. What are you noticing on the demand front? Where's the demand going? Where's the weakness? How quickly do we see these lockdowns or the spread take effect or not?
Well, yeah, thanks for having me on guys. Yeah, I think on the gas side, we're finally seeing a pretty constructive picture starting to be painted for U.S. natural gas prices, and that's pretty impressive given the fact we've been pretty much in a decade-long bear run for gas, and the things we're looking at right now are really focused on the production side. We're seeing production really start to fall off a cliff in terms of U.S. lower 48 production. We're down around 6 or 7 billion cubic feet a day year on year, and that's being driven by a number of different factors. You're seeing a lot of the pure play natural gas players with kind of difficult balance sheets at this point, and they're just saying they're not going to grow anymore because investors are telling them not to grow. And on the other side, Alex, you mentioned oil. Oil had been a big bearish blanket on gas prices the last few years, and when I say that, I'm talking about associated gas. That's gas that you get as a byproduct from oil production. So now with WTI, down in the $40 range, we're starting to see incremental oil production really slow, and that means we're seeing less associated gas come into the market. So when you couple those two things together, natty gas producers producing less and less associated gas, we really like the setup going into 2021, and we actually think this could be kind of a sustained 2 to 3 year bull run for natural gas.
I'm curious, you mentioned there investors not being very keen to put money to work in this space, and that's going to have a limiting factor, and basically they're telling these companies not to invest. I was reading a Wood Mackenzie report a little bit earlier on that talked about the fact that if we hold the rise in global temperatures below 2 degrees C, that could reduce upstream investments by 65% in this sector through 2040. Does that kind of number sound about right to you?
Well, I think in general what you've been seeing is a lack of capital flowing into the U.S. Kind of gas space, and part of that has been ESG concerns, but also part of that's just been the low prices that we've seen. So when you kind of put those two things together, companies are now saying, well, we're going to produce, kind of at static rates. We're going to produce with kind of a maintenance capital outlook, and anything we get beyond that's going to go to paying down debt and improving liquidity. Some of these pure play natural gas companies have a pretty large debt burdens coming through in the next few years. So I think that's really going to be the focus, and that's why when I talk about a sustained run for natural gas, I think it could get pretty interesting, because in the past when we've seen a rally in prices, suddenly you see production start to grow again by 15, 20% year on year. This time around, if you listen to some of the Q3 earnings calls, producers are saying even if we get a move, $3 plus higher, in the coming 6 months, they're not really going to increase their activity all that much. So again, that's why the setup looks pretty strong for gas heading into this winter, and even the next few years after that. Demand's been relatively strong too. I think that's the other side of the coin that needs to be looked at. Gas use and power has been hitting record levels. The level of exports from the U.S. is hitting record levels.
Yeah, but Nick, can that actually continue? I mean, Biden's green plan you'd think would be good for natural gas, but natural gas is actually coming under fire just like oil. I mean, California just today is banning, San Francisco, I should say, is banning natural gas use in new buildings.
Yeah, and I think on the margin, on the margin, it will be somewhat bullish for gas and oil prices in the short to medium term. And what I mean by that is if you look at kind of the Biden administration and what they're looking at doing, regulations, specifically focusing on kind of federal lands, will probably be a bit tougher than they were under a Trump administration. So that probably means you're going to be losing volumes in terms of production. And we see that as being somewhat of a bullish indicator, kind of further supporting our bullish thesis into next year. I think when you look at Equinor as a company, we're fairly well situated, regardless of what policy moves take place. I mean, we're a broad energy company, focusing on oil, gas, solar, and wind. So I think from a diversification standpoint, we're fairly well set up, regardless of policy moves we see under a new administration.